Buckle up. The Fed's work is not done fighting inflation. We have Joe Tigay standing by. Joe, the Fed paused on rates this time, but it sounds like more hikes could be on the way at a later date. What do you think?
Yeah, so I think the market was expecting a hawkish pause, whatever that means. For me, I thought it meant that they're going to try to convey that interest rates will not be coming down as soon as the market expected. But I think the news out of this meeting was that there were some participants on the Fed board which favor 50 basis points of more hikes. So there's potentially at least 50 basis points higher on the terminal rate that we're looking at out there. So that was a surprise for the market, on top of the fact that the market's looking at no rate cuts for longer than they previously had thought.
The market reaction was swift yesterday. Looking ahead, what tends to happen?
Yeah, usually overnight. So today we'll get a good picture by the end of the day what the next move will be. And, this is we have to take things in the bigger picture. When the Fed is raising rates, it's when the economy is doing well. It's not surprising that the market does well when the economy is doing well. Also, people are talking about the Fed lowering rates. I think market participants want to see the Fed lower rates, but if they were to lower rates, that might mean bad news for the economy, and the market doesn't do well when the economy is doing poorly. So right now, the economy is strong enough to justify these higher rates, and maybe we'll suffer in the short term equity-wise because we have to readjust our expectations for rates. I think for the long term, I think that means good news for stock owners.
Thank you, Joe.
Thanks for having me.
Go to businessfirstam.com for where to see our show on TV.